For topic two, we're going to talk about FICA taxes. These are your Social Security and Medicare taxes, okay? So, kind of definitions or descriptions of what this means is we have that in addition to income tax, we are required to pay federal government FICA taxes. This stands for Federal Insurance Contributions Act, okay? All right. And these are taxes that are used to pay for Social Security and Medicare benefits. Okay. Taxpayers are not permitted to subtract adjustments and deductions here. You're just looking at your gross pay. Okay. So that's somewhat of a bummer. With the federal income taxes, we can reduce our gross income, but with FICA taxes, you can't. Okay. These apply to your gross income. Okay. Now, Social Security, in case you're interested, these provide payments for eligible retirees, people with health problems, or eligible dependents of deceased persons and disabled citizens. So these are kind of the benefits you earn once you retire or if you cannot work, okay? And then Medicare provides health care coverage for Americans 65 and older, okay? So you pay into this system in the hopes that when you retire, you'll get your payments back, okay? So that is the ultimate goal. So it's always tricky when you think about taxes. It's like a bummer to get rid of the money that you're earning now, but the idea behind FICA taxes is you pay it now, you get it when you retire, okay? Now, we have a FICA tax rate table. It's similar to the marginal tax rate table, but not nearly as involved. Okay. So you have kind of three categories. You have what an employee pays, like the employee rate, and then the employer matches a rate, and then you have self-employed rates. Okay. So if you kind of look at this table, think of these two as sort of going together. So if you are employed by somebody else, you pay FICA taxes and then employers will match that to a degree, I think. But then if you're self-employed, you're responsible for all of this, okay? So for us, we're just going to kind of look at one example of if you work for somebody and one example if you are self-employed, so you have your own business, okay? We don't actually have to calculate this one. We're just going to look at this little box right here and then this little box right here. So we're going to see what you, a taxpayer, would pay out if you are employed by someone else, and then again, if you are self-employed. Okay, so if you are employed by someone else, the way this works, for the first $142,800 of your gross income, you pay 7.65%. After $142,800, you only pay 1.45%. Okay, and then if you are self-employed, it's a little bit different. If you're self-employed, you pay 15.3% on the first $142,800, and then you pay 2.9% on anything in excess of $142,800. Okay, so if you are employed by someone else, you pay a portion of the FICA taxes, your employer pays the rest. If you are self-employed, you pay all of it. Okay, so let's look at how this works. Okay, I'm going to try to keep both. Well, let me squeeze that. Let's get it right here. Okay, so for example 3, it says find the FICA taxes owed by each taxpayer. So for part A, it says the taxpayer is not self-employed. That means you work for a company, okay, or you work for another person, okay? So you're not self-employed and you earn a wonderful $210,000 a year. So the way this works is you would fall into this category right here. You are an employee of someone else. So you pay part of your FICA taxes. The employer pays the rest. We're only going to figure out how much you, the taxpayer, pays. Okay. So for the first 140, let me go back to the black marker. For the first $142,800, you pay 7.65%. And remember, if we have 7.65%, we move the decimal to the left twice to get this in decimal form, which is what we need. So this is the same as 0.0765. So for the first $142,800 of your salary, you pay 7.65%. And then for the rest of your salary, you only pay 1.45%. So what would that end up being? Well, we max out at 210,000, but we don't want to tax that first 142,800 twice. So we want to subtract what has already been taxed. So we're going to subtract 142,800, and this is going to get taxed at 1.45%. So let me scoot that over a little bit so it doesn't. So this is getting taxed at 0.0145, so 1.45%, okay? So 1.45%, if we wanted to write it as a decimal, we move the decimal to the left twice, making it 0.0145, okay? So let's clean this up a little bit. So 142,800 is still getting taxed at 7.65%, so 0.0765. But let's figure out what the second chunk of our income is. So we want to take the 210,000 for our gross pay, subtract what has already been taxed, which is 142,800. So that gives me 67,200 that is being taxed at 1.45%. So we multiply that by 0.0145. And so let's do those calculations. If you don't have your calculator out, please get it out. We want to take 142,800 times 0.0765, and I get 10,924.2 plus, then we want to figure out what 67,200 is times 1.45%, so 0.0145, and I get $974.40. Let's clean this up. Let's go ahead and find the total amount of FICA taxes that we pay. So we get 10,924.2 plus 974,000.4. And at the end of the year, we would have paid a total of $11,898.60. So remember, you're not like writing a paycheck for this. Or not writing a paycheck. You're not like writing a check to the government for this. What happens is your employer takes this out of your paycheck each pay period. So each week, each month, twice a month, whatever the case is, your employer is estimating what your FICA taxes are. Well, they're not estimating. They're flat out calculating your FICA taxes, and they take it out of your paycheck. It goes to the federal government, and the hope is that when you retire, that money's still sitting there and you get it back. Okay? Now, let's look at Part B. So in Part B, it says this taxpayer is self-employed. That means they're responsible for paying the entirety of the FICA taxes, the employee and the employer rate, okay? So in this case, we're looking at this box right here, okay? So we have a self-employed taxpayer. They pay 15.3% on the first $142,800. Anything in excess of that, they pay 2.9%. So we're going to take 142,800 and we're going to multiply it by 15.3%. So 15.3% is equal to 0.153. So I multiply by 0.153. And then to that, I want to add whatever is left over, which is going to get multiplied at 2.9%. So this employee has a gross income of 150,000. They've already taxed their own income at the 15.3%, so that was 142,800. Whatever is left over is going to get taxed at 2.9%, which is 0.029. So 0.029. So let's clean it up a little bit. So we take the 142,800, we want to multiply it by 0.153. And then we got to figure out how much we still owe because we've only paid taxes on the first part. So we want to take the 150,000, subtract 142,800, and we still owe for $7,200 of our income. That's going to get taxed at the lower 2.9%. Now I'm showing this step by step so you can understand where all these numbers come from. Once you show me this, you could type all of that into your calculator at one time and just get the answer. I'm breaking it apart so you can kind of see all the different pieces. Okay, so 142,800 times 0.153, we would have to pay $21,848.40. For the 7,200, we're going to tax that at 2.9%, so 0.029. We pay an additional $208.80 on that. So finally, if you are self-employed, the FICA taxes that you would pay would be 21,848.4 plus 208.8. We would get $22,057.20. So again, if you're self-employed, you're responsible for both portion of the FICA taxes, the employee portion and the employer portion. Versus if you work for another company, you pay your portion of the FICA taxes, the employer pays the rest. Okay, so that is how the FICA taxes work. Again, the idea is each pay period, your employer, if you're employed, your employer takes a portion of this out, they send it to the federal government, and then in however many years, when you retire, you'll get that money back. Okay. Whereas if you are an employer, like you employ yourself, you probably don't do this every month. You probably do this maybe quarterly, you fill out quarterly tax forms and you send this money to the federal government. And then again, the idea is when you retire, you get that money back as Social Security and Medicare. Okay. So in the last video, what we're going to do is we're going to look at how to calculate your paycheck. So like your actual gross pay and then your pay stub.